Chapter 30, The Art of Investment. Invest your time before you invest your money. This is how I decide on my investments. I trust in people more than technology. If you tell me there is some person who has some technology that will change the world, I'll tell you I don't care. I believe in Tata. Some other company might have better technology, but I trust Tata more. I trust in a group of people, and that's why I put 50% of my investment money in people who are running good companies. It's not just Mukesh Ambani who is responsible for the success of Reliance Industries. The company has hundreds of people exceptionally well equipped with knowledge. That's how they are running that company. So, 50% of the money I want to invest goes into blue chip companies where I feel the management teams are very, very strong. It could be stocks of good companies, it could be mutual funds, all of that. I could also give that 50% of my money to a good financial advisory company and ask them to handle my entire portfolio. This 50% of my money is invested safely where people have shown great past results, are riding current highs, and have a good vision for the future. They have an exceptional track record because they have been steered by qualified people. Then, 30% of my investment money is in less safe investments. Again, I trust in people, but with this 30%, I give myself the liberty to take some calculated risks and have a little fun. I go with my gut feeling, my understanding of the market, and my understanding of the economy. I put my money in startups when I feel that the person has created an extremely strong company where the idea is very innovative and I see the growth potential. Now, from a large group of people like a management team for the 50%, we have narrowed it down to two or three hustlers and entrepreneurs running a startup. This 30% I put into angel investing. I get in early so there is a risk to reward ratio. As it is said, हीरे को जल्दी तराशो तो पैसा ज़्यादा मिलता है. Sure, I pick up some rocks in the process too, but the returns are high. The next 10% of my investment money is my fun money. I invest in crypto and uncertainties. Who knows when or if it will pay off? I gamble with this money and bet on whether the market will go up or down. Even if I face a loss, at least it won't be a huge one. If I were to put rupees 100 in 10 years but only get 90 bucks, it's not a bad deal. Alternatively, if that rupees 100 jumped to rupees 200, I would be happy as it was just 10% of my money. It really doesn't matter too much either way. I enjoy myself with this 10%. The remaining 10% I put in absolute certainties like real estate and insurance. My logic is if nothing works in life, at least this 10% will. That is how I invest. Sandeep Das, strategy consultant and best selling author, says that considering the current scenario, the ideal portfolio should be like this. Say you are saving rupees 100, 60% to 65% should be in quality debts because the more you have in safer instruments, the better bets and the better risks you can take. About 25% to 30% should be in two equity classes, large cap funds and the US stock market. The remaining 5% to 10% should be invested in gold because it is an excellent diversification vehicle. According to him, the equity market might not give you as much as you think in the upcoming decade. After considering inflation and the LTCG tax, the stock market can realistically give you around 7% to 8%. These are debt instruments which give you that much with no volatility. So, the notion of taking risks and generating returns is actually questionable. The only class of assets which can give you such a disproportionate return is if you have your own firm, because then the return on capital employed can go up to 18% to 20%. If you invest your money or time in something that is a trend, something you don't know anything about, then it is a bad investment. The hype market is very different from the real market. If we take cryptocurrency, for example, 90% of investors don't know anything about it. No one knows where it came from, what it's about, nothing. People are just following the trend.